this is Tom Cloud with an update on gold and silver. I want to start, I had two people after the last one ask me each time I did one of these to say what gold, silver, and platinum has done since January the 1st till today, the day I'm filming this, 8/20, which was a Friday, I think. So anyway, I start with that. January 1st, gold was at 26.06, and now it's at 33.40 for an increase of 28% in 9 months, excuse me. 28%, it's 9 months. Silver is up 32% from January the 1st till August 20th, which is a little better than gold. Platinum was the king. Platinum came in at 47% profit in this year, 2025. It's hard to believe watching these prices in standard investments. You're lucky to make 30% in 10 years. And this is, you look and see what's going on in these markets. And we'll get into some of the reasons why in a few minutes. So the Dow Jones for the 8 months is up 5.1%. The S&P 8.7%, and the NASDAQ 8.28%. Once again, on the same period, goes up 28%, silver 32%, platinum 47%, the Dow stock 5.1%, S&P 8.7%, and NASDAQ 8.28%. I don't say that to say put all your money in gold. I want to make that clear. I'm just saying it's time to increase your holdings in hard assets as fast as you can, because what you have coming at you over the next few months is going to be unbelievable. Game changer just happened last week is the talk of my world, and that is what Harvard did. Harvard, in their endowment, the biggest in the world, bought 15% of their assets, up from 3%, into hard assets, mostly gold, also Bitcoin. So this is Harvard buying this, and you see unbelievable saying it's crazy. You can't have just 3% in gold and silver when it's the best performing asset. And it's not as volatile historically as stocks and bonds. So you look at it and people are changing because they're going to see Harvard doing this, and they're going to do it because Harvard is following the central banks, who we've talked about for 3 years, that they now can own gold and carry it at full price, and it's driven gold up 58% during this time frame, and it's going to go a lot higher because gold is rare, and it's going to run out at some point, and it's going to have an astronomical price, and it's probably going to be even compared to the others, as we'll see them now come in, other endowments, other big pension plans, state pension plans are all going to come in. They're looking at it. I have friends that are dealing with them right now. I wish I could tell you what all is going on in my world, but unfortunately I can't do that and keep getting information. So to close that out, remember, Harvard last week moved from 3% of their assets on the biggest in the world, and it is now 15% and could go higher because as they feel more uncomfortable with different equity real estate investments that they're scared of. So now we look at, it could be ground changing now, informing as we look at the long, strong upside that it has developed and is continuing to develop. We're watching it sit and go up like a rocket with hardly any downside, and we see that continuing. If gold goes up 30% more, it'd be another all-time high of 3% more, of 3,460, where it's 33.40 on Friday. Next, we look at the dollar decline. I mean, this is most unprecedented. The dollar is dropped for the same time 10.1%. We know from history, and y'all know from listening to me, you've talked for years, every time the dollar goes down, gold goes up 2.5 to 3%. Gold's down 10% this year, gold's up 28%, right on schedule. And we're not through yet watching the dollar has now come from 108 down to 97 on the world index. When, not if, it hits 92, we think it'll drop all the way to 72 as the dollar will sell off all over the world. And the ones of you saw my last video, I had just come back from Europe and nobody would take the dollar. We were in England, we were in France, we were in Switzerland, we were in Italy. In one place would they take the dollar, nowhere. I mean, they'd take a credit card, but they wouldn't take any physical dollars. And you can see why something going down that fast has got a lot lower to go. So we sit here and look at that and support. So the dollar value is 97.73, and now we're seeing that the Federal Reserve, after what Powell said Friday, that if we take that dollar and let it keep going down, I've already told you what's going to happen with gold, but it's also going to cause other investments to have more inflation because they're printing money. Our dollar's worth a lot less this year. So you got to keep up and see what the 3% rule brings, and everything going on with numbers out there are mind-boggling as to where people think. Here you have, we're the largest gold owner, supposedly in Fort Knox, in the world. It hasn't been audited since President Eisenhower back in 1950. So you look at it now and you realize that the gold is going to have to play a part in saving the U.S. dollar. So you got that going on. You've got Powell trying to ease interest rates just a little bit because the dollar's in trouble and it's going down. So we'll see how that plays out. It'll be very interesting. The budget deficit we've talked about for years, $34 trillion out there, and it just went, and it ends September 30th, the fiscal year, and we're going to see $1 trillion of interest put on the debt, or approximately 3% of the 34 trillion that the deficit is. So once you put another trillion on it, it's going to continue to attack the dollar as we go that way. We've got two other problems creeping in. We've got the Dodd-Frank Act. We're going back to the Obama days and remembering when we went from 40,000 to 250,000 to keep your money in the bank, and this was under a thing, but they voted to bail in. The next time there's a banking crisis, the banks can keep your money. They own it. You don't own it. No, I'm not crazy. You don't own it. So they'd bail in. They would take the money from your banking account and leave you some to operate on. But many people believe that's coming in the next year or two, that we're going to have a banking crisis when all this stuff we're talking about here and other issues hit. The world can't take it. It can't take as many, plus all the money we pay for flooding, earthquakes, all these things that are created out of thin air for a disaster case. So we look at that and realize that when the dollar, some of the biggest deals I'm working on now involve banks, and we also are seeing people forecasting gold prices that I have hard to believe. And I certainly don't know where gold's going, except I know it's going up. But if you don't watch it, it could go up substantially, especially if China moves in with a gold-backed currency that's being talked about. A gold, you win, and that could come at any time. But the BRIC nations now are buying. Russia's buying gold. Central Bank, China, all the BRICS nations, they're getting out of the dollar. They're getting out of the dollar and putting it into gold and other investments like that. So many of you have heard me tell you, if you want to get an idea how fast this debt's compounding, is go to debtclock.org. Do it, usdebtclock.org, and look at what's going on. People, we're in a bankrupt situation, but yet we act like we've got all these assets. Gold's probably the most valuable asset, and we don't know how much exactly we have. We're told it's worth one number. We know it's way too conservative, and at some point, that gold is going to be what bails this country out, and that's an opinion. But I certainly can't imagine right now having gold as my most endeared investment. And now you see these Harvard come in and tell you they're going from 3% to 15% last week in their total portfolio. So continue to watch these, all these people that are going to gold and away from bonds, because it's debt. Bonds are debt. We just keep piling up debt after debt after debt, interest rates. So it's time that you look at it and get where you want to be. There's going to be some very tough times coming. Hopefully Trump's things will turn and help the economy and do it. But so far, everything he does is inflationary, even though he's doing some really good things for this country. But we'll do it. But anyway, the ones of you that want a gold or silver IRA, my grandson Tripp handles them. He's doing a tremendous job. A lot of people my age in their 60s and 70s and 80s are out of work, have quit working, and they're taking two 401ks and into two self-directed IRAs. And one's for gold and silver, and one's for stocks and bonds. And you decide which percentage you want in each one. But I would urge you to call us at 800-247-2812, 800-247-2812. Ask for Tripp, and he'll help you set up one of those if you'd like to do that as you retire, to have where you can buy it in your pension plan and let it accumulate tax-free. We're doing a lot of additions to this kind of investing. We urge you to do the same if you don't have it to invest with private funds. Of course, if you have private funds, then there's taxations and stuff down the road. But anyway, get in touch with us. You can reach Tripp or Catherine, my daughter, at 800-247-2812. Hopefully we'll get back here with an update for you in 2 or 3 weeks, and I hope you have a great fall and holiday season coming up, but I expect to have a new one out. But if you need to talk to me, just call the same number and I'll call you back. All right, with all this knowledge you got today, I hope you'll use it. And this is Tom Cloud signing out.